Join us now, Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. Stephanie, that number on Friday, good number, but some revisions. The labor force and the way that works put us up to 4.9, which there's a 3.9. It put us up to the highest level we've seen in a while, even though the number was good. So there's all these cross currents, but the bottom line was that the 10-year yield continued to come down a little, and I think tomorrow's number could do more of that if it looks like January was a one-off for inflation.
Yeah, Joe, the data has been pretty good in the last couple of weeks.
What's
I'm
good,
looking at
what's
the
good
3
mean,
month.
Steph? What's good mean? See, good. We're looking for soft, aren't we, or not?
No, I'm looking for good, Joe. We root for good. We want growth, but we want inflation to come down. And that's exactly what we're getting, actually, right? So just look at the 3-month average for jobs, because Friday's number was wonky with the revisions and whatnot. So you're running at about 265,000 jobs per month. You have average hourly earnings, which are coming down, but they're still good, 4%. That's good for the consumer. Then a couple of weeks ago, we got within GDP, you got consumption up 3%. You have personal income up 4.8%. You have savings at 3.7%, and that all at the same time you have inflation coming down. So yes, to your point, tomorrow's number is very big, but we are making progress. Core PCE at 2.8 versus 5.6 at the peak. Last week we had unit labor costs that came in better than expected, about 2.5%. Productivity actually increased. That's also a good sign for inflation. So add it all up, it's good for earnings. And we've been talking about the broadening since last October, Joe, and it's still happening. And Friday was really wild with like tech and semis getting just crushed. And yet energy financials actually have continued to rally. So I like that. It is also worth pointing out the Russell 1000 growth still up 9% year to date, so really good numbers. But the Russell 1000 value is playing catch up. That's now up 5%. That was flat just a couple of weeks ago. So I like the broadening out, and I think that's good.
So you did indicate that the generals were kind of retreating, though. I mean, you expect that to continue? That the rank and file will be moving up, but you may not see the same for the previous leadership?
I mean, I think that tech and comm services certainly could take a pause. I mean, look at these charts. They're just parabolic. Not to say that they're not great stories, because they are. There's a lot of great themes with AI and cloud and cybersecurity. I get all that. But they've had their days to shine, and the valuations are a little more rich, and they're very crowded. And so when I look at earnings and I see like financial services earnings grew 7%, industrials earnings grew 6%, healthcare at 8%, that's not too shabby, right? So and so the valuations are actually pretty attractive for those sectors, and so that's kind of where I'm leaning. You and I talked last week, and you kind of were laughing at my picks because I was picking more of the cyclical names when I picked Eaton and Masco and Schwab. I still like those names very much. I think those have a long way to go. And then today I like Target, I like Exxon, I like D.R. Horton. There's a lot to like that is not tech.
Tech that isn't Magnificent Seven. I mean, I was just looking at Adobe's now $250 million, and Oracle is over 300. Yeah. I mean, those are they're underappreciated. Maybe they've continued to do well. They're just not in the Magnificent Seven. Do either of those? They're both reporting this week. Interesting.
Yeah. I mean, I think Oracle is interesting. They just have inconsistent execution, but the valuation is very attractive. And obviously, they're in the whole cloud arena as well. And I think it'll probably be a pretty good report. Yeah, it has lagged the Mag 7. I think within tech, there's other places as well to own. I've liked IBM forever, and that stock's actually done pretty well. And it's still trading at just 18 times forward. And you do get data center cloud and AI in that. And I like CDW. You and I've talked about that too, because I do think you're seeing, I mean, if you listen to Dell, the PC cycle is bottoming out, and that's pretty attractive as well. So I think there's a lot of, by the way, I like Apple. I know that the stock acts horribly, But I think it's more attractive now ahead of the April print when numbers have already come down, expectations have come down. We all know China is a disaster for them. They're going to fix that eventually. And of course, you've got WWDC in June that comes, and we're going to learn more about their AI strategy. And oh, by the way, I think in the April quarter, you're going to get another 90 billion buyback. So I kind of like that one, too.